Good morning, traders, and welcome to BCR's morning market analysis. Let's take a look at how the major markets are shaping up to the start of the week. First up, let's have a look at the US dollar index, which continued its recent climb, rising close to the 98 mark last week and gaining around 1% overall. The rally was driven by heightened trade tensions and renewed policy signals from the Fed. President Trump announced a sweeping series of tariffs, including 35% on Canadian imports and a 50% on copper and Brazilian goods. Which are all set to take effect on the 1st of August. General 15 to 20% tariff on most other trading partners is also in the pipeline. Meanwhile, the Fed commentary remained focused on core mandates. Chicago Fed President Goolsbee pushed back against political motivated rate cuts, emphasizing the Fed's priority remains employment and inflation. Labor market data showed some early signs of cooling, but remained solid overall, which supports the US dollar. The greenback was particularly strong against the yen and the euro. Technically, the dollar index is hovering just under the key resistance near 98, an area that aligns with the top of a falling wedge pattern. While the RSI has rebounded to around 42 and MACD shows early signs of bullish crossover, a clean break above 98 is still needed to confirm a trend reversal. If rejected, we could see a drop back towards 97.5 and 97.4. Below that, the major support lies at 96.38. Next up, let's have a look at WTI crude oil, which saw a modest gain for the second week in a row, supported by growing geopolitical risks. Tensions escalated last week when the Yemeni rebels sank two ships in the Red Sea, raising fears of potential supply disruptions. On the other side, President Trump's aggressive tariff measures have sparked concerns about slower global growth, which could dampen oil demand. Midweek, crude dipped more than 2% after OPEC revised down its global demand forecast for 2026 to 2029, citing weaker consumption expectations from China. OPEC also agreed over the weekend to move ahead with another 548,000 barrels per day output increase in August, keeping this spotlight on potential oversupply concerns. From a technical perspective, crude is facing resistance near 67.98 and the Bollinger midline at 67.71. The RSI remains just below 50, reflecting mixed momentum. Key support lies at 40-day, at the 40-day simple moving average at 65.39, with deeper downside risk towards the 63.72 and $63. On the upside, a break above 68.1, which is a 200-day SMA, could target the $70 mark and the 50% Fibonacci level of 70.23. Next up, let's have a look at gold. Gold continued to benefit from global uncertainty last week, rising for a second consecutive week and closing around 33.55, which is up roughly 0.65%. The metal attracted safe haven flows after Trump rolled out a barrage of new tariffs on Canada, Brazil, and copper, and hinted at the fact that there's more to come. Additionally, his call for a massive 300 basis point rate cut fueled speculation around a more dovish Fed posture in the year. Gold's upside was capped by short-term dollar strength and surprisingly firm labor market data, with jobless claims hitting a 7-week low. That tempered immediate expectations for aggressive Fed rate cuts. Technically, gold remains in a bullish channel. The price reclaimed its $3,300 mark and now looks poised to challenge resistance around 3365, 3368. A breakout here would open the door towards the high from June 23rd of 3397 and potentially the 3445 peak from the mid of June. On the downside, immediate support sits at 33.25 and 33.20, with stronger support around the $3,300 mark. Lastly, let's have a look at the Australian dollar, which rallied last week, rising from lows of 64.85 to as high as 65.95, a near 1 month high. Gains were supported by the RBA's surprise decision to keep the cash rate unchanged at 3.85%, with Governor Bullock citing persistent inflation risks from high unit labor costs and low productivity. Um, Deputy Governor Horsa also warned of the economic fallout from escalating global trade tensions, while Trump's tariff threats capped some of the Australian dollar's upside later in the week. China's latest inflation data provided mixed signals. CPI edged up 0.1% year on year, but missed monthly expectations, and PPI dropped further, raising questions about the strength of Chinese demand, which is a key driver for the Australian dollar. Technically, the Australian dollar remains in a bullish setup. The pair is holding above the 25-day SMA at 65.25 and the key psychological support at 65 cents. RSI is above 50, and the pair is now testing resistance near 65.95. A break higher could open room towards 66.15, which is the upper band of the Bollinger Bands, with a long-term target set at 66.80 or the 67-cent mark. On the downside, initial support lies at 65.28, followed by 64.42, and the lowest being 64 cents. Well, that's all from me today for this morning market analysis. Stay alert as markets continue to digest global policy moves, especially around trade and interest rates. Wishing you a strong strategic trading day ahead. And as always, manage your risk and happy trading.